Tax Zweli Mabhoza. Gentlemen, good afternoon to the two of you and welcome to Business Unusual.
Yes, good morning. Good day.
Afternoon to you. But Zweli, let's maybe start off here.
Yeah.
From a tax perspective, we know, I guess this is more a, how would I say it, a supply side intervention, all right, if I can put it that way. What is this youth employment tax incentive or the youth wage subsidy that many people have been calling for? We know a few years ago there was a big political debate around this issue of the youth wage subsidy. Just maybe explain to us, how it's been implemented since 2014. Who does it cover? Between what ages and, of course, at what wage level? Okay.
Just as a background, if you look at the legislation, it would tell you to say this is the background behind the introduction of the legislation. Essentially, the Minister of Finance, together with the Minister of Labour at that point in time, they were concerned about the level of unemployment of young people. So they decided to say, look, when they talk to the employers, they say the people are quite expensive and they don't have experience. So they decided to say, look, as an intervention, we're going to introduce this employment tax incentive. What it does basically in terms of calculations, it reduces the employee's tax that is paid by companies to SARS. But in terms of qualification, it is for people who are between the age of 18 and 29. That is the starting point. Two, the entity that qualifies for this must not be a government-related entity. It cannot be a municipality. It cannot be national government. It cannot be local government. Then the other disqualifying criteria is if, for example, you decide to displace some employees because now you want benefit from this, then you don't qualify straight away. So those are some of the things that when people are thinking about this, they need to keep in mind to say, you know what, there are certain checks and balances. And the reason for that is that the labor market, in fact, let me say the trade unions at that point in time, they were concerned that certain people were going to be retrenched so that young people could be employed. So they are very clear to say that you cannot do that. So it's one check and balance that had to be introduced. So that is very, very important. You must be someone who's got an ID or an asylum seeker permit before you can actually be doing this work. Before the company can get a benefit. The other thing is you cannot just bring your relatives if you've got a company. So it should not be people who are connected persons to the employer. So that is very crucial because otherwise people, they just bring their own relatives and say, look, in any case, I was giving you so much, so you may as well come here and so that I can get the benefit. Domestic workers as well, if you employ a domestic worker, it's completely out. So the intention is to just invite businesses that can provide training to people so that after they've actually been trained, they can be marketable.
Sure. Karabo, let me bring you in here. And I must add that a lot of the literature on this particular issue and its effect since 2014 is not unanimous on whether or not this has been effective in getting more and more young people into the labor market. But I want to ask from a small business perspective. One would think that it certainly would incentivize people to go through with that additional hire of that young person who's earning less than 6,000 Rand and who potentially would add more value to a smaller company than they would to a larger company. And if you look at the numbers, it's quite clear that it's by and large larger companies who are turning over more than 10 million Rand who have accessed this incentive more than anybody else.
Yeah, I think a lot of small businesses are missing out on it, but for the entrepreneurs themselves, I don't think you can blame them. But I think the responsibility lies with the accountants that help them to put together their finances and help them with their taxes. A lot of small businesses consider finances and financial management to really be about, you put together your financial statements when you need a bank loan or when you need to get a tax clearance. But I think it's a responsibility of their financial advisors and their bookkeepers and accountants to then say to them, look, if you do this, we can actually help you to lower your costs. So this is something that I think small businesses can really benefit from, especially if you consider that they're already suffering from the increase in VAT that we had last year, from the minimum wage that was also put in place. So these are some of the things that can help to ease that burden. But a lot of them, because of ignorance, they're not aware of that. So I think the crucial thing there is that their financial advisors, their accountants should be assisting them with that. And also, if we combine that, especially, for example, if you take this SME and you put it on the, that it can also be combined with the youth employment service, with the YES campaign. And what we're seeing also is that a lot of corporates, because they internally do not have the capacity to absorb the amount of labor that they require to benefit from that, look to SMEs where they can actually place these people. So
how many of those have you seen? I mean,
not a lot.
how many SMEs can come and say, you know, Karabo, so-and-so big corporation could not absorb, say, 1,000 of the 3,500 young people they got through the YES program, and they've now taken 1,000 to, say, 10 different SMMEs.
Look, I think the process is a bit complex because the SME has to register first with the Youth Employment Service. So I think it almost behooves SMEs that are in especially enterprise development programs to then engage their corporates that are sponsoring them to say, look, this is what I would like to do, and then also to go to the Youth Employment Service itself and inquire about registering, so that, you know, a lot of these things, you know, if you're an entrepreneur, your job is to solve problems, is to be entrepreneurial. So in that way, you've got a problem of costs of competitiveness, and I think part of that, it's your responsibility almost to say, well, there are these things here, to go out and find out what is available from the DTI, what is available from SARS, talk to your financial advisors, as I said, etc., and then engage with these different entities and say, what can happen? You know, it's no point sitting back and saying, look, nobody's doing anything for us, we can't get market access, we can't get financing, we can't get... So there are these little tricks that I think SMEs can put together and do it.
You've raised the issue of awareness, and last week we asked a few entrepreneurs online through our 45business_ platform and also on my own Twitter account. And we asked them firstly, do you know about this incentive? More importantly, would it incentivize you to employ more people? And let's take a look at some of the responses. We also know that there are some questions that they've posed as well, and some of those tweets are coming through there. Unati Twala saying she didn't know about this one. And Sandra Chabangwa saying she didn't know about this one. Where can she find more information about that? And Zweli, we'll come back to you about that response. Monobisi Olifir saying, indeed, this program is not fully active as per the desired outcome, different attributing factors in place. Another program is the Jobs Fund, introduced by Jacob Zuma in his SONA. We don't know what happened to its progress, and yet President Cyril Ramaphosa came with, yes, duplications and no results. And I'd love to hear your views on that, gentlemen. Langa Mangele on Twitter saying the Jobs Fund is still active. One project he knows is the River Sands Hub, and the YES program addresses unemployment, but it incentivizes firms on a different category, so the two programs are complementary but not a duplication. I'd love to hear your views on that. Ncedo saying they don't know, and also they use unqualified advisors and accountants, so that leads them to missing out on certain information sharing benefits. Budzweli?
Yeah.
Big question many entrepreneurs who are watching this might be asking themselves is, firstly, how do I find out more information about this? And I think Karabo's already flagged that accountants become an important conduit in that conversation, just like they would help you with your UIF and the pay as you earn, and tax consultants like yourselves. But in addition to that, I mean, I'm quite interested in some of the scales here. And I hope we've got the graphic we can put up there that just shows if somebody's earning 3,000 Rand, if somebody's earning 4,000 Rand, and this is how much they would potentially benefit from this one.
Okay, let me just start with the way you get the information. It's like any other law, because this employment incentive, this is law, okay? Then what normally happens is that ideally one would expect that, as Karabo has alluded, that an accountant will tell you and say, you know what, there's this benefit. But it's like any other legislation. If your accountant is good in tax, chances are he's going to know about this.
Okay.
But if your accountant is not very good in tax, chances are they may not even be aware that this thing exists.
Okay. Talk us through this table here. It looks quite complex here. So, yeah, I'm seeing monthly remuneration, and then I'm seeing ETI for the first full 12 months, and then I guess how they calculate that.
Yeah, look, this is coming on a sliding scale, so if there are any errors here, I did not prepare this calculation. I think
okay, no, this is from SARS.
Just want to put a disclaimer straight up. Okay, now let's just take, for example, the first line. In the first line, what is happening here, they say that for the amount, in the manner in which you calculate this, if you pay someone 2,000, the benefit that is going to come is going to be 1,000, okay? And then in addition to that, there's another 500 that is going to come, for anything that is over and above that.
Okay.
So, but the first 1,000, which is the benefit that you're going to get for the first 12 months, because that is, remember the way in which this works, and I don't know, because in terms of how we do these columns, the first column is about the employee, then the second one is the amount that of the remuneration, then you've got the calculation, and then you've got in the first 12 months, okay? So that is the benefit that you have. But then what happens is that you could retain that employee for another 12 months. Then now when you retain that employee, in other words, it means that employee is not marketable, they're still with you. The benefits, they go down.
I see. Okay.
Now let's look at what is happening now with someone who's earning 3,500. Okay? For someone who's earning 3,500, the benefit is going to be 1,000 in year one.
Okay.
Okay, then in year two, the benefit is going to be 500.
Okay.
Okay. So if, for example, you've got someone who's earning 4,500, you can see that the benefit now is going to be 750 in year one,
Sure.
and then it will go down by 50%. So what is happening is that as and when you move, if you earn more than 6,000, if you earn 6,000 or more, there's no benefit at all.
Sure.
Okay?
Sure.
For the employer. But the other thing that is interesting here is you have to look at the industries as well. Say which industries are likely to employ someone and pay them less than 6,000.
It's largely retail.
Because
Maybe
generally, I mean, right now we know that in the mining sector, if you had to invite the guy who's the head of
Amco.
Amco, he would be telling you that I want 3 times that amount.
Of course.
So it'd be talking about 18,000 per month.
Sure.
So as you can see that the target market there would be people that are mainly in the retail sector. And I wonder if the skill that they get there will help them to be employable in the future.
Will it be marketable? And I guess that's the big question, Karabo. If we look at the threshold here, 6,000 Rand, that already implies that any entry-level person who's going into those sectors is going into sectors where the reservation wage is beneath that 6,000 Rand. Yeah. Which ideally means that you're closing out many of the knowledge-intensive and skills-intensive sectors, which are crucial for the future of work and for, I guess, the fourth industrial revolution.
Yeah, so I think the way I look at it is, if you look at the unemployment stats in the country, education is a key, I think, factor there. And so I think this is targeted at people that are excluded. So the people that are undereducated, for example, that don't have a matric, unemployment there is about 55% or so.
Sure.
So I think that is where the heart of the problem is, and this is where this is targeted at. Because for graduates and people that are that have university degrees, unemployment for those is less than 2%. Yes, and people with other tertiary qualifications, I think it's about 7% or so. So the issue here is that the people that are excluded are people that don't have skills, that don't have a lot of education.
Or don't have a secondary education.
Yes, and so how do you bring them in there? Can you justify paying them 10,000, 15,000? And I think the incentive is to get them in there. And then if you look at this also, you have another incentive in terms of learnership. So if you take the guys on learnerships, you can get an incentive of an additional 80,000. So in total, it's 92,000 Rand that you can get for somebody that you're paying. If you're paying them 6,000 Rand a year, their total salary is 72,000 Rand. So the idea is to get people into jobs and then give them training and upskill them so that they become employable. And I think we've got to look at it in that spirit, even though it's going to have some unintended consequences in terms of driving.
Okay, gentlemen, I want us to pause there slightly. When we come back, I want us to put our heads together and say, for that small business that Ayabonga is running there with his 2 people and his cat and his dog, how do we ensure that, I guess, we assist in this compliance burden? Because some of us might not be able to afford accountants. Some of us might not be able, I guess, to afford the capability of being able to file all of the things that are required in order to comply and benefit from this. And I guess the other people who fall outside of the net is, if I'm a business person and I'm not registered for Pay-As-You-Earn and UIF, is this adequate enough an incentive to push me to register from a tax perspective? We'll come back to some of those questions after the break we're going to take now. And after the break, we take a look at some of your questions and comments that have come through, and also engage, we continue to engage with our experts here in studio. Remember, you can engage with us on social media. Ask us your questions. Tell us what you think on the socials. And our hashtag is #BusinessUnusual. Our official handle is @405business_. Coming back after this break.